Because what I wanted to hear is that the businesses are going great and they're adding subscribers hand over fist. That's not what I got. What I got is the business is kind of okay, but they need to do some restructuring to make it good, okay? This is exactly where the hard work comes in. I think Mr. Iger's up to the task, but there is a question, and I asked it to you last night in a quasi-rhetorical way. Are we going to cut the fat or are we going to cut into the muscle? Now, you can't answer that right now. You don't know. I think that Mr. Iger has a better hold on the creative forces at Disney than Mr. Chapek did. So I'm very willing to give him the benefit of the doubt. But I have to make this point that, you know, to see the stock go up as many have gone up because of cost cutting, because of headcount reduction, is to me a little bit of a sugar high. I need to have the meat and potatoes of the business doing better. Businesses, plural. That being the theme parks, the studios, and the streaming business. Now ESPN's in its own little category. They say that's not because they're going to hive it off, but boy, it sure does look like that's what they want to do with it. I mean, that's just me talking.
Well, I mean, he was asked about ESPN.
I know, he said he's not.
Said they're not. But the caveat to that I wrote down to what Mr. Iger said was, as long as it remains profitable, okay? That wasn't a slamming the door fully in the future, dismissing it completely out of hand, okay?
Yes, and he's also got a bigger, more immediate problem, which is Hulu and the Comcast agreement there.
Non-committal there as well.
True.
He was non-committal.
There's a, as you said, all right, there is a lot of work to be done. The rubber hits the road. In my opinion, they've got to figure out the Hulu situation with Comcast first.
So let me ask you this. If there's a lot that still has to be done and the hard work is just beginning, are you glad that the proxy fight is over?
Yes. Yes, because it's a distraction that's out of the way. Now, interestingly enough, and you know I wanted Mr. Peltz on the board, but now Disney's 2 for 0 on these activists. And I forget, was it Dan Loeb? About 6 months ago, it was Dan Loeb, right, who came in and he talked to Mr. Chapek, the CEO, and said, okay, you guys have it under control. All right, so that's actually a good sign. I mean, listen, Mr. Peltz wouldn't back, you know him. He wouldn't back down if there was work to be done there. He feels good about what he sees.
Well, the stock's up a lot since he came along, and they, being Disney, they have done a lot of things that they suggested they should do. So it's an easy opportunity to declare victory.
Right? Yeah.
Right?
I mean, it's up, what, 22% since he came in?
Well, okay. I mean, well, that's a lot. And not only that.
But I don't think that's why.
But they implemented a lot of the things that Peltz and company were talking about. Bill, you got it too, right? You're in Disney.
Yep.
You happy with today?
I'll buy more if it gets down to 108. I am happy with today. The numbers, you mentioned subscriber growth. I think that's a one-time drawdown in subscribers tied to India sports media. I think that we'll see subscribers pick back up. The cost cutting is a big thing here. What we've been saying is, and as you say, it's just begun. This is the greatest storytelling brand ever, and they have their own story to tell. And this story has just begun. He is putting this to work right now, and nobody knows this business better than Iger. So I like the direction that we're already headed.
Okay, I couldn't help but wonder, in some respects, as I said, the stock was off the best levels, if it was in part because Peltz is ending the proxy fight. And in some respects, there's no longer somebody standing from the outside over the shoulder and pressing the case and making sure that they get what they say they're going to get done. But that's just me. I was just thinking that. I wonder, Sarat Sethi has joined us here, too. He's another Disney shareholder. And, Sarat, you said from the outset that you were a fan of management here. You were not going to vote for Peltz if it came down to a proxy fight. It's obviously not. What's your reaction?
Well, I think the right thing is now let management focus on execution. And really, they're going to have their feet to the fire. There's a lot of work to be done, as you guys have just talked about. I think execution in all the different 3 different divisions they have. And, you know, Jim's point about ESPN, I think, is absolutely spot on. He's isolating ESPN so that, you know, for the public to see what's going to happen there, and then you can easily spin it off or sell it to somebody else. But the focus here is going to be execution. You know, go back to the word of the metaverse of efficiency and really try and see how you can grow cash flow and earnings. I mean, there's a lot of potential here. You have huge amounts of recurring revenue. You have a lot of things that you can do with creative and the amusement park. So I think if they can do that, and also don't forget, we got succession issues too. So there's a lot of work to be done here. It's a good thing Peltz has backed off. But look, the other thing is if things don't work the way they're supposed to, he can come back, or you can get a bunch of others come back again. Just look at what's going on with Salesforce with 5 activists in there. So I do think it's going to be under a keen, full, watchful eye for Disney shareholders now.
All right, Sarat, I appreciate you calling in. I'm going to move because I got a lot to get to, but I did want to hear from you since we talked about it a lot. Shan, you have a take here?
Yeah, so Scott, we actually sold out of our Disney position a couple of months ago, and I think there are significant questions, I guess, in terms of the execution. I was happy actually to see ESPN being carved out because I do think that that's a bit of a distraction if you think about potential growth avenues and the impact of ad spending on that division. I think that, Jim is right in that we are sort of thinking about it in terms of what are the money makers here. I mean, I think this emphasis on park revenue and how much those of us who held Disney and perhaps held it through that period, we were really looking for the rebound there, and we've seen it. And so, can they bring that similar momentum to other portions of the business? Always happy to see kind of an activist threat kind of removed, especially if it yields some results. But I think succession is going to continue to weigh on this stock, and so I wouldn't be necessarily jumping back in on this news because I think that there is a little bit more wood to chop.